On our second trade here, we're waiting for the Globex side to be taken out. The Globex is 75 1/4. We'd like to see some cross trade above that. We have positive bias on the tick chart though. That is tempering my shorts here above the Globex for, in my mind, simply because the gap is yet to be filled up here. But we'll pause and wait to see what the market action is. I would like to see a run to the 78s, and that would be a place that I would short. 78 is the close. I think 77 and change is the bottom of the opening range. Let's see, or excuse me, not the opening range, the bottom of the closing range on, what was that date, 2-1? 2-2, February 2nd? February 2nd. The bottom of the closing range in end period was 77 and change, 78. Close was 79. And the upper end of that closing range was 83. So anywhere between 78 and 83 would be a nice place for a short. We can get up that high. So we'll just take a break and watch. Well, we made the double top at the Globex. We see a little bit of cross trade here. Now what I'd like to do is just wait for a retest. I will wait for a retest. I will not get in this market unless there's another column besides this one that retests this high. Whether we miss the trade or not, I'm going to wait for a retest. Okay, we just opened up the other column right here. Now we need to see what happens when it comes up back to the 75s. If it does come back up to the 75s, this column had a lot of two-sided trade. Usually, I notice that the next column sometimes is lighter. This one has a lot of cross activity. I'm not sure exactly what to think about that. I'm a little bit hesitant to take a short, even though it's over the Globex high, simply because the gap's just a few points above us. I feel much more comfortable taking a short at the gap, considering our stop's only 2 points. If we short at 75 or 74, we could easily be stopped out quickly on a run to the gap. We'll just let the I might have missed this trade. We'll just let the market move here and be patient. The E period just opened up. E period just opened up. We have a push up here. We're patiently waiting. We still haven't reached the bottom of that closing range on 2-2. We have some cross trade building up here. We'll see if we get there. Here we're moving. We're about 1 point away. We hit the 77. Our trade 77, 76, 3/4. We're building some cross trade up here. See if we can click 78. And boy, I'd like to wait for a retest. Well, I'm tempted to take the short up here at 76. I was hoping we could get to 78. We're building a lot of cross volume up here. We're going to take the 76.50 short to 76.50 with a 2-point stop. With all this cross trade up here, 39 to 27, 41 to 28, 47 to 34, 45 to 10. If we did get stopped out at 78.50, I would look to get right back in once we touch the gap there, either the close, which is a little bit above 78. The close is actually 79. The low of the closing range was 78. High of the closing range all the way up at 83.50. So we'll just be patient and stand by our stop, stand by our strategy. We know the closing range. So if we do bust up here, we'll be prepared. Give it another shot. See, now if I was following what I typically do in January, we'll pause the video and get the phone here. Got interrupted there. Sorry about that. Now, what was I saying? Well, we know where the closing range was. We know where the gap close was. We have our position at 76.50. We have a good basis for that decision. We see lots of cross trade up here. A lot of building, in my opinion, on passive selling. So, if we get stopped out on this one with our 2-point stop, I certainly wouldn't be opposed to looking at the closing range. Maybe 79 might be a little early. 70, maybe 80, midway through the range. I don't know. We'll just have to see. But I'm pretty confident that all of this trade up here is passive selling. So we'll see. We'll we'll pause the video here since we're not really going anywhere, and we'll revisit. This might be the last hurrah. We had the reversal column occur just a second ago. If we can retest this area with any significant volume over, when I say significant, I mean over 6,000, over 5,000, something big, then we could see the high
here in the E period, maybe for the day. It looks like we're in a rotating market today. It looks like a balanced market's forming. The reason I say that is, excuse me, we didn't see much momentum once we broke over the Globex high continue in the E period. We saw a bunch of cross trade up here at the high in the E period, and I think there's some backing and filling to do below us. I think we could go back down and test the 38 area. I'm not saying we test the 38 area today, but I think we could test the 38 area. I would have felt a little more confident if we closed the gap at 78 or 70, anywhere between that end closing range, 78 all the way up to 83, but we didn't yet. So that's my idea on the market. If we do get a push up and we have a one period selling tail, in other words, say the E or F or G period pops up, closes the gap at the 78, the 80, the 83 area, whatever price point it stops at, and reverses in that same time period, and we have single TPO mark, then I think we're headed back toward the other end of this multi-day distribution, which would test the 38s. So that might be a good swing opportunity for anybody that has the patience to wait a couple days.
Well, I think we're early on this trade. Our 78.50 stop is only 2 ticks away. I think we're going to get stopped out. We're going to watch for another opportunity to get in here. There's our 78.50 stop. Well, it hasn't ticked there yet, but it looks like it's going to tick there. Let the video run a minute. 78.50 is still there, and that's if we don't get stopped out, that'll be the second time we can really close. Maybe 2 points is too close. Maybe, if we keep try to refine our entries, maybe we need to do a 3-point. I don't know. But we did touch the bottom of the closing range from February 2nd. We're building cross trade up here again. So if we do get stopped out at 78.50, we might have a quick reversal. We'll pause the video here now. We only have about 3 more minutes of allocated time. If we do get stopped out, I want to have a little time to reposition. Alright, there's our stop. We're out of the market on that trade. Now we'll pause the video and look for retest. We're going to take one more shot, take the 78, short 278. The thing that's concerning me now is, with our short of 78s, we closed the gap, at least regarding the close. We didn't go up to the high of the end period range on February 2nd, but we did get to the close, and we don't have any momentum to the downside yet. There's still a lot of cross trade up here. I'm not sure what to think about that. I'm a little confused, but we have our stop at 80, so that's fine. And it's our third trade, so if this doesn't work out, we get to take a little bit of time and cogitate and relax and think about the market. I still think that the market's headed below us here once it's into the gap. The next major resistance area above us is 1400. So we'll pause the video and see if the market breaks down here. The one thing that I can say that might prove to be make this trade negative is the tick chart is just building above the zero line for the majority of the day. The majority trades above the zero line. That worries me, no doubt. And I was just thinking how we traded in January compared to what we've been doing lately. And in January we never really had a strict stop, like 2-point stop over our entries. We usually tried to better the position. That I didn't particularly like because it puts you in an over-leveraged position sometimes, and then when the drawdown does occur, it's fairly significant, but we still had a pretty good month. February we were trying a lot of different things with limited success, but that's okay. We want to explore various techniques so I can find, you might say, my niche. You might find so that I can find something that I like and I feel comfortable with trading. But we're close here to getting stopped out. 80 is our stop. Our chart here is messed up, but we didn't click 80 yet. We'll pause the video, straighten the chart out. At this point, if we do get stopped out, I won't be trading again because this is our third trade. But if I was trading, I would, based on my comment regarding the New York stock tick chart, if there was a retracement back down toward the 8-period high, that might be a good entry for a long. I wouldn't buy up here at the market unless you were risking 15 points or something. But I think if you got a retracement back to the opening initial balance, you might have a good position. But we're still short here from 78 with our stop at 80. Well, the F period just opened up. We just clicked 80, so we're stopped out. Now we have a loss for the day, 3 point loss. So we're going to sit and see if we do get a retracement back to the 71s. Even though I'm not technically trading again, we'll look to see if the market does come back to the 71s and what it does when it does come back to that 8 period high.